Is outperforming today. It is up more than 3%. Joining us now is Ben Emmons of Medley Global Advisors. Mike Santoli still with us, of course. Ben, are you buying, or do you just view this, as we've seen other big rally days, as a bear market bounce?
It still looks like a bear market bounce, Sarah. I think that it's encouraging to see this across the board rally. But as Mike will probably also confirm, is that we've seen this before, right? We've seen now, I think, the last 3 weeks. If you get a bounce, it's across the board, every sector, and then the following day it's taken back. So we're obviously dancing on earnings. I mean, today's numbers from Bank of America were good for consumers, and it immediately translates to consumer discretionary with, the Amazon was a big index heavyweight then driving up the stock market. But just be wary, because I think as much as the risk out of the UK is now somewhat diffused, there's more CPI data coming out, including from the UK. I think that will become a next big focus for markets as we try to move towards these earnings.
Ben's right. Amazon is the leader right now in the triple Qs. Apple, Microsoft, Tesla, Meta, Nvidia, they're all working today, and that's leading to a big rally. But I do wonder if earnings season, and we got a reminder from Bank of America, can be a source of relief.
Yeah. I think there's potential for that without a doubt. Estimates came down outside of energy by 7 percentage points heading into the numbers. It seems like they'll be achievable. Typically, corporate America is going to warn you if they're going to miss big. So I think that
got a few of those.
To the extent that the rest of the world allows us to focus on those things, yes, then I think it can be a bit of relief. The question with every rally lately has been, is the bond market going to permit it, as we were just talking about a little while ago? Are Fed speakers going to overtly try to push back against it? We don't have any Fed speak today. I think maybe only Wednesdays when we'll have it. So you have to put that into the mix with, okay, you have a suspect bounce, or an untrustworthy one. At the same time, the seasonal factors are starting to work in your favor. Sentiment, all these atmospheric conditions start to look like the risk reward might be getting slightly better. But again, those are the softer elements as opposed to the hard, don't fight the Fed type of factors. And just to the point of big rallies, in the last, I was just looking at this, 19 or 20 trading days, there have been 5 up days, including today. The smallest gain of the 5 up days is 1.97%. So
they're really big.
You get these big pops, and then they haven't really strung together.
Well, it's reminiscent of other bear markets
exactly.
and crisis-type periods. My question, Ben, is specifically around technology heading into earnings. If there's a broader opportunity beyond a day or two, just because of these valuations have been hit the hardest.
Yeah, I think there is, Sarah, because, I was looking at EPS forecasts, and the technology has now come up so hard in EPS growth, and it looks like to be bottoming, at least by estimates. So if you do believe that you're going to get an environment where, as Ballard was right over the weekend, we're going to get a bullish case for markets because we're reaching to a level of rates that push down inflation, and knowing that technology is so sensitive to interest rates, and you're seeing these EPS growth estimates start to move up again out of the trough, then for big tech, that becomes an interesting opportunity. You play the conservative names, say like a Microsoft, but I think it's an interesting moment here.
Conservative names like Microsoft, would you put Apple, would you put, I don't know, Tesla? That doesn't seem very conservative.
Right, so I'm not, full disclosure, not the analyst on Tesla or any of those names, but let's put it this way in a broader context, right? Technology is still a big driver of growth in the economy. It's making its adjustments. It's overhired. It's probably showing up in employment numbers. So if you think of big tech, it's obviously related to interest rates as the economy adjusts to inflation. So that's still your big macro factor here driving these stocks. But I was encouraged to see the EPS estimates at least being, troughing, so to speak. So I think you're getting to a point where, you're going to be able to capture an opportunity again for upside.
Ben Emmons, thank you very much for joining me. By the way, Tesla rallying about 6.5%, and then Amazon another 6.5%, makes consumer discretionary by far the best part of the market, up more than 4%.